Should you invest in thematic funds at all? If you purchased or if you bought thematic funds in 2024, it's more likely that you are sitting on losses right now. And if you have bought it towards the end of 2024, you are at huge losses. So you may be wondering, should I stay invested or sell them, or what do I do? If you have such questions, or if you're thinking, should I invest in thematic funds going forward? Or if you have questions, are thematic funds better than large cap, mid cap, small caps? Or how are they compared with the sectoral funds? If you have all these questions, today I'm going to address these. I have an interesting analysis. I've done a 15-year analysis of some of the common thematic funds, and I will share with you. Wait till the end. So today I'm going to cover what are thematic funds, how they are different with the sectoral funds, and what happened in 2024 and what is happening right now in 2025, or what if you are right now sitting on some thematic fund with losses, what do you do? So some of these questions I'm going to address today. Hello, I am Franky Fernandes. I am a certified financial planner, and I'm also a certified marriage coach. I've written a couple of books on marriage. One is on money and marriage. And my goal, my mission is to help young families. And if I'm going to talk today about thematic funds, I'm going to talk to those families who are right now probably sitting on losses. And as a family, should you have thematic funds as part of your portfolio? And how will it help you achieve your financial goals, your long-term financial goals, not just retirement, but also children's education and their marriage? Should you have thematic funds at all? Right? So this is what I'm going to address. So if you are sitting alone, I encourage you to sit with your spouse, listen to this. Even if your wife doesn't understand or your husband says that they don't understand, let them try to listen. I've tried to make it as simple as possible so that you understand and you both together make those important financial decisions for your family. So let's get started. So what are thematic funds really? And how are they different from sectoral funds? So let's quickly talk about sectoral funds. Although this video is not about sectoral funds, I may have to create a new video, but sectoral funds are basically funds, mutual funds that are focused on certain sectors. For example, IT, technology is a sector, financial services, pharma, right? So these are all sectors where the companies are focused on just IT. So a mutual fund that invests in only these companies becomes a sectoral fund. So similarly, thematic funds are also similar to sectoral funds, but they're slightly broader because they cut across sectors. For example, a theme could be ESG, environment, social, and governance, right? So companies that are focused on these themes, a mutual fund will invest in these companies. Or for example, infrastructure, or maybe let's take a digital. So companies that are focused on digital, or companies which are infrastructure heavy, where the focus is on infrastructure, or for example, PSUs. So PSUs are also a theme. There are many other types like the MNCs or next gen or manufacturing. So there are various themes, and themes cut across sectors. But the difference between a thematic fund and a normal fund is the other funds that we invest, like large cap, mid cap, small caps that we talk about, they are diversified, which means they cut across all sectors, all themes. The universe of companies are large. Whereas when it comes to thematic, the universe of companies becomes less, and sectoral funds becomes much less. So if you look at all these three, sectoral funds are very, very risky because you have only a few companies that you can invest in. And if that industry gets impacted and the shares fall, your fund will have a huge fall. At the same time, since it is high risk, you'll also get high returns, because if as a company, as a sector, IT does well, so all your stocks will go up, so your mutual fund will give you higher returns. But thematic funds, since it cuts across various sectors, it has more stocks or shares or companies where the mutual fund can invest into. Nevertheless, they're also risky, higher risk compared to the large caps, mid caps, and the small caps that we talk about. Now, why did I think of doing a video on thematic funds? because thematic funds were in lot of news. They were in news in 2024 and also in 2025. 2024 because a lot of money went into these funds and they gave amazing, stupendous performance. But in 2025, they are giving negative returns. So अगर आप देखोगे कि 2024 में तो काफी सारा न्यूज था और काफी लोगों ने इन्वेस्ट किया. So let me share with you some news items. So here it says, after raising 80,000 crore in 2024, will active thematic and sectoral NFOs take a breather? It says, since May 2024, thematic and sectoral fund category saw at least 10,000 crore net inflows in each of the months. However, with markets under pressure, inflows plunged during October, November. That means till September, huge inflows. What were the kind of inflows? Let's keep reading. So this is a news item in Economic Times. In December 2024. It says year-ender to 2024. Sectoral thematic mutual funds fetch highest inflows. Should we focus on them in 2025? Mutual funds collect 1.18 lakh crore via NFO in 2024. Thematic funds dominates space. So what does this tell us? That investors were chasing thematic funds because of high performance. This defense mutual fund gave over 100% return in a year. HDFC Defense Fund, the only active fund based on the defense sector, has offered more than 100% return in the last 1 year. The scheme gave 128.52% return in the said period. The scheme has offered around 60.16% return in 2024 so far and around 55.25% return in the last 6 months. So mutual funds, some of the thematic funds have given huge returns, and so all investors were chasing returns. Was that the right strategy? To know if it was the right decision in 2024, let's look at 2025 news items. What do they tell about these thematic funds? If you see this screen, it says sectoral and thematic funds, top 10 losers in 6 months. This was as of February 2025. If you see Samco Special Opportunities Fund, minus 24%. Tata Infrastructure minus 23. And if you look at the average, it is minus 20%. These top 10 losers. And there's another news item which talks about sectoral and thematic funds. Top 15 funds lose over 20% in 2025. That means the calendar year 2025. The average is 22-23%. Shriram Multi-Sector Rotation Fund is negative in this year by 26%. And the least out of these 15 is UTI Innovation Fund, which is 20.06. So right now, even as I talk, many of you who have invested in the thematic funds, probably that is what has drawn you to this video. You may be sitting on losses. Even if you are sitting on profits, probably those profits were so much, they have just come down. Now you're wondering, should I continue? Is this the right fund for me? So let me begin by asking, who is this thematic funds for, or sectoral funds? Can everybody buy thematic funds? Because we know mutual funds are for all kinds of retail investors. Even the poorest of poor can invest in a mutual fund. A typical diversified mutual fund like the large caps, mid caps, small caps, flexi cap, multi cap. Anybody can invest. But can anyone invest in thematic funds? Let's go back to what I earlier said. Sectoral funds and thematic funds. They have a very small universe of stocks. When you have a smaller universe of stock, what does that tell? They are high risk because the diversification is less. See, diversification is one of the biggest benefits in a mutual fund, which is a diversified mutual fund, large caps, small caps, mid caps. When you invest in these funds, sectoral and thematic, what are you doing? You are taking a bet on these themes or on this sector, which is high risk. So number one, if your risk profile is conservative. Now, what is conservative? So there are 3 broad types of risk profile that each individual investor falls into: aggressive, moderate, and conservative. What is conservative? Conservative is where you can't take a lot of risk. When you look at your portfolio negative, you feel very bad, extremely bad. You cannot tolerate. So you're conservative. Then somebody who has been in the industry for some time is a moderate, which means you can see some losses, which is okay. But if you see a lot of losses, you are disturbed. But aggressive investor, a risk profile, somebody who has an aggressive risk profile, can see any amounts of risk, can see any amount of drawdowns. If the market falls 20, 30, 40%, they are confident. So there are these three types of, if you want to know more about this, watch my video where I've covered this, announcing the best mutual fund not for you. So that's a place where I've actually explained about mutual funds and about risk profiling, right? So watch that video. If your risk profile is conservative, you cannot see losses. This is not for you. And I'll explain a little more on this. Please hang on why I'm telling it, okay? And what is the reason I'm telling this? If you are moderate, probably you can have 5% little exposure. But if you are an aggressive, probably maybe 10 to 15, not more. Why? I'm going to explain. But that should be your strategy. So remember that your core portfolio should be made up of the large caps, blend of large caps, mid caps, small caps. So a fund is the best, a diversified mutual fund. That is pakka, that is core portfolio. This is called as a satellite portfolio, which means you have it, nice to have a small part of your portfolio, but you cannot take the risk of just leaving it there. You should know when to enter, when to exit. Because for a thematic fund, this is one of the very important tenets, that you should know the timing. And that's the reason I say have a small portion, because if you are a young family, or if you're focused in your career, your job, which is very important, we all have to be focused on your family, on your children, on your hobbies. Getting returns is not what you should be doing. Please watch my video on, is it time to switch from direct investing or stock picking to mutual funds? Because I believe that as retail investors, we should be focused on our jobs, on our families, on our health, on our community and building and whatever, and not chase after returns. Give that to experts. So coming back to mutual funds, coming back to the risk profile and the mutual funds, if you have thematic funds, you need to be tracking. So unless you have the time, please do not venture into thematic funds, because they're high risk. And we saw just now, a while back, the returns, a lot of negative returns. I know a friend of mine who invested into digital many years ago. It went into losses, and during the bull phase, it came up, and again, it went into losses. Again, it has come down. So they are very risky. You should know when to enter, when to exit. If you do not know, it doesn't make sense. But is that the only reason why I'm saying so? Look at the HDFC Defense Sector Fund, which we talked about 100%, more than 100% returns in 2024. In 2025, it has given a negative return of 21.43% in this calendar year. Again, Invesco Mutual Fund has two schemes with negative returns. Invesco Technology Fund around 21% negative, and India Infrastructure Fund at 21 again percent negative. And these thematic funds, they are quite volatile. Sometimes they'll go very high, sometimes they'll go low. But what is more important is, how about long term, right? So let me talk about this infrastructure fund, and this is what this news item tells. So this news item says that typically the broad-based equities, which is large caps, small caps, mid caps, typically tend to recover within 2-3 years after a fall, after a crash, after the market fall, compared to sectoral or thematic, which often take years. It seems it took over a decade for the infrastructure sector indices to recover to their January 2008 levels after a steep fall during the global financial crisis. It took a decade. In 2018, you could see some positives. So they are definitely risky, and they take many years to recover. That means you have to keep a track for many years before it recovers. So is it worth investing? And what you've already, if you have already invested, should you withdraw or should you keep? So before we do that, I want to show you an analysis which I did, again using a software which helped me to find out the rolling returns. If you watch my video, equity funds become risk-free after 7 years. If you watch that video, I have covered the large cap, mid cap, and small cap. I have covered the 15-year, 20-year rolling returns, daily rolling returns for a period of 15 years, and what it tells. Very interesting data. Similar work I've done for the thematic funds. Of course, the challenge with the thematic funds is that you do not have a lot of similar types of thematic funds, but I've picked up two, infrastructure and consumption, to show you what they look like. And then I've also taken an average of many other funds, many other thematic funds, to show you how it looks. So let's take a quick look at this analysis. There are a lot of things, just you can just quickly look at it, maybe pause the video. I'm going to summarize it a little later. So if you see here, just few things. Max returns in 1 year is 108.13, and then 3 years it is 42, and then later on it keeps going down up to 11%. There is a max returns. Yes, minimum returns. If you see here, very highly volatile. In 1 year, it can even go down by 39% on an average. In the last 15 years, this is what it shows. Negative returns is little concerning. This is because of the infrastructure themes, as I just mentioned a while back, that it took 10 years to recover. So probably that is one of the reasons. But if you remember in my previous video, 7 years are safe period, but here there is still concern. And if you have to look at more than 12%, the chances of getting good returns, it slightly goes down here. If you see in the last, if you see the 1, 3, 5, 7 years, chances are less. 10 years it is shown, but again it goes down here. So chances of getting more than 12% is less comparatively across all time periods. And the number of funds, you have to notice this is 17 funds. Look at consumption, we have 4 funds. The data is less comparatively, but what does it show? Compared to the infrastructure, the max returns in a year it is shown as 74%. And the number of the average is around 13 to 20, 25. Yes, negative returns, the chances are less in a consumption fund. In the past historic data, it shows that the negative returns, the chances of negative returns become slower. But one interesting thing is that chances of getting more than 12% returns keeps increasing in a consumption fund. So compared to an infrastructure, consumption fund seems reasonable, better over a longer period. MNC funds, there are 3 funds for the MNC funds. What is the highest is 95. Then it keeps reducing. The interesting thing is the minimum and maximum returns over a long period is decent, 13. For consumption also it was around 13, but infrastructure it was 11. Again, the chances of higher returns, it keeps increasing in an MNC fund. So MNC funds seem to be better than the infrastructure. So MNC and consumption funds seem to be good. Even the negative returns the chances are low as the number of years increases. Then I took 10 to 12 funds. There are multiple themes, several themes across like manufacturing, PSUs, Gen Next, and probably digital, and several other funds which I took. And here, if you see, the maximum is 93.92, and it keeps going down. But good thing is that the number of years for 15-year period, the highest and the lowest are almost the same. But here a little concerning, 47, 54, 54, and then it again goes to 56. So overall, the chances of getting higher returns is less on an average across all themes. Nothing much can be talked about it because it's an average. Nevertheless, here it shows that the chances are not so high. So what we have just seen is that the rolling returns over the 15-year period, 15, 10, 7, 5, 3, and 1, and try to see what does that tell us. Now what we'll do is we'll try to compare this with the broad-based the diversified equities like the large caps, mid caps, small caps. In my earlier video, I've talked about it. So in this video, I'll try to compare this with the thematic funds. So the maximum returns across all categories: large cap, mid cap, small cap, infrastructure, consumption, and multi-theme. A very interesting thing comes up. In 1 year, over the last 15 years, if you look at the data, the 1 year data shows that there are high chances that in a large cap, mid cap, small caps, you will actually see higher returns, which is surprising. I always thought thematic funds give high returns in shorter periods, but it is not true. That is not the fact. And probably in the last 5 years, post COVID, the story could be slightly different. But over a long period, if you see, when the markets go up in bullish, when the markets are bullish, here it shows that large cap, mid cap, small caps have much higher probability of giving much higher returns compared to the infrastructure funds, the compared to the thematic funds. So this is something very interesting. And when you look at the 15-year period, also the mid caps and the small caps are clearly the winners. Even large cap has better than the thematic funds in a 15-year period. Even if you look at the 10-year period, they are higher. So the mid caps and the small caps are clearly the winners in maximum returns. If you see here, large cap are comparable compared to, even in 5 years, probably 5 years, you see slightly higher returns. So maybe maximum returns you could see up to 5 years in thematic funds, but they are nothing. They are, but not comparable with mid caps. Mid caps and small caps are truly the winners over a long period. Risk is less because they're diversified, and also returns are high. This is one thing which I feel mid caps and small caps score over the thematic funds. Negative returns, almost everything except for infrastructure, the negative returns beyond 7 years, any mutual fund, it works beyond 7 years, it's zero. The chances of getting negative returns is zero. And except for infrastructure has been an outlier. Otherwise, if you see here, compare this data and this data. So if you look at it, they are almost the same except for the infrastructure. The chances of getting negative returns in the first year, 3 years, and 5 years are high. 7 years onwards, they seem to be reasonably safe. Now, chances of getting 12% or higher, interestingly, in 1 year, it's almost the same. And looking at 15 years, the chances of getting higher returns is mid caps, small caps, and consumption funds. Otherwise, multi-theme and large caps are comparable. Infrastructure is an outlier. In the 10-year period, also not much difference. They are almost the same. The chances are higher again in mid caps and small caps. Mid caps and small caps clearly the winners, followed by consumption. Chances of 12% or higher returns across time periods. Mid caps and small caps are better. Consumption is comparable. But then you may say, oh, that was the past data, and 15 years is a very long period. The world has changed. India has changed. So why not look at the past 3 years? How have the thematic funds performed compared to the mid and the small caps? Probably that will help you. So here I have downloaded an Excel, data for funds in an Excel sheet. There are some 15 mid-cap funds. Then there are 19 small-cap funds and around 13 thematic funds. So I just pulled the data based on whatever is available. So I wanted to get as many funds as possible where I can compare them with 3 months, 6 months, 1 year, 2 year, and 3 year. Right. So, and these greens mean that they are the top 10 for that particular time period. So let's take for the 3 year. Of course, a lot of thematic funds do not have data here, but the reason I had it because I wanted a more number of thematic funds in the universe of funds so that I can compare them. Assuming that you invested 3 years ago, what you would have received, what would be your returns right now? So Some of the top funds are Motilal Oswal Midcap Fund. There are two thematic funds, but then there are small cap funds also at the top. Then there are thematic funds, then there are small cap funds, and then mid cap fund. So the top 10 in the last 3 years, if you had invested in a thematic or a mid cap or a small cap, the or if you just invested in a thematic fund, probably you would have got to four of the thematic funds are figuring here out of 10. The rest of the six are mid cap and small cap. So 3 year data, the top funds are not only are not thematic funds. So let's take a look at 2 years. Now these top 10 are small cap. There's only one, two, and three thematic funds. The rest of the seven are mid caps and small caps. Now let's take 1 year. If you'd invested 1 year back, these are the 10 funds. There would have been two, again, only three thematic funds. The rest of them are mid caps and small caps in the last 1 year. So if you'd invested 1 year, 2 year, or 3 years back, you would have got some profits in the thematic funds. But the important point to be noted is if you had invested in a small cap or a mid cap fund, also the likelihood of getting good returns was high. Now, if you look at the bottom in the 3 year, let's take the 3 years. Which are the bottom funds? The bottom, you have one thematic fund. Yes, the lot of the other funds are the mid cap and the small cap. There are no thematic funds here, obviously, because 3 year is not the right time period to compare because there's only one thematic fund. So I think 3 years, 2 years is a good data to compare. So let's look at the bottom. The top 10 are, as I mentioned, there are 2 or 3 thematic funds. At the bottom, you still have Edelweiss, Kotak Infrastructure also at the bottom. Although there are not many funds here, of course, out of the 1, 2, 3, or 5 funds, 3 are on the top, 2 are at the bottom. Probably 2 years also is not the best. So let's compare 1 year. So on the top, there are 3 funds, thematic funds on the top, but at the bottom, you've got a thematic fund. You've got some thematic funds at the bottom too, not just mid cap and small cap. So if you look at the returns, the top of them, the returns are around an average of 19%. The lowest are probably here, maybe 6%. And you also have the thematic funds here. So if you look at 1 year, 2 year, 3 year, the thematic funds are not really on the top. The mid caps, small caps are also on the top. So you also have comparable returns. Now this is the profit. Now let's take a look at the short-term losses. So in 6 months, if you'd invested 6 months back, some of the top 10 funds, which means they have less, the fall is not as high as the other funds. You have one defense fund, you have an innovation fund. So 2 funds are on the top right now. Out of those 12, 13 funds, only 2 funds are at the top. The rest of them at the bottom, you've got Samco, Kotak, Motilal, Bandhan, these green funds. These are all at the bottom. That means they have even given 25. See, this is the negative returns. And a lot of them are the thematic funds. There are small caps, there are mid caps funds, like there are small cap funds here. A lot of the small caps. In fact, the mid caps actually haven't fallen so much in the last 6 months compared to the thematic funds and small caps. And in the last 3 months, if you look at it, you have several of the thematic funds at the bottom. Negative 20%. Here you've got thematic funds. There are small cap funds also, few small cap funds, but a lot of the funds that haven't fallen so much are the mid cap funds. Some small cap funds. So, but you still have a lot of the funds at the top, which means the negative returns are much less compared in the last 3 months. So what does this tell us? The simple message here is that the high returns, the short-term returns in the 3, 2, and 1 year even mid caps and small caps give as much as the thematic funds. But when the markets fell, the thematic funds fell more than the mid cap and small cap. Now, this is what has happened in the last 3 years, particularly in the last 1-2 years, when the thematic funds were the flavor of the season. Many investors invested. We have just seen the numbers some time back. Thousands of crores of money has gone into the thematic funds. But when the market fell, they crashed more. But when the market was up, they gave good returns, but they were comparable with the mid cap and small cap. So that, which only tells that you are better off with the mid cap and small cap. So let's do a summary of all that we have done till now. So what is the analysis based on the last 3 years data? What is the recommendation? What do we learn from this? Let me quickly share with you my recommendations. Observation: there is no distinct advantage investing in thematic funds in the long term. Mid cap and small cap have given higher returns in the last 15 years in most time periods. We have seen that 15-year data. We have seen that mid caps and small caps are clearly the winners. In fact, even large caps have done well in the if you look at the last 15-year data. In the last 15-year, this data, thematic funds are particularly not great. The probability of higher returns keeps diminishing, and the highest returns that are there over several time periods, it is the mid cap and the small cap. My recommendation is investing for long term may not give good returns as much as mid cap and small cap. So if you're investing for long term, mid caps and small caps are much better, and a good portion of large caps. So there is no distinct advantage. Number two, the last 3 years in the short term, that is less than 3 years, in bullish markets, returns are as good as mid cap and small cap. But in the bearish phase, which we have seen in the last 6 months, the fall is much higher. Risk is high, returns are not commensurate, which means, so compared to mid cap and small caps, the risks are high. That means your NAV will fall. The returns will be much lower compared to the mid cap and small cap during the bearish phase. But in bullish markets, they'll be as compared to the mid cap and small cap. That means returns are as good as the mid cap and small caps, but when it comes to risk, it is much higher. Obviously, the reason is the universe of funds which the fund manager has got is less. Let's assume that for a thematic fund like an infrastructure, if there are 50 funds to choose from, there are 50 companies to choose from for a fund, infrastructure fund, a thematic fund, or any thematic fund. But when it comes to mid cap and small cap, the universe is much large, maybe 500 companies. So the risk can be diversified much more in a mid cap and small cap. That's the reason why in the short term, when the markets fall, they fall much higher, because the universe of funds is very less. So there is no diversification in a thematic fund as much as a mid cap and a small cap. But mid caps and small caps, even though the number of companies are higher, the returns are much higher. We saw it in the long term, they're much higher. Even in the short term, they're comparable. So what is the recommendation? In the bull run, if you exit, returns are as good as mid cap and small cap. But in the bear phase, the loss is higher compared to other diversified funds, which means you should not really come out of thematic funds when the markets are down. But when the markets are up, you exit, you get better returns. And the other third observation is bullish phase seems right time to exit, and bearish phase right time to enter. So the recommendation is now buy thematic funds when the markets are down and pessimistic, and sell when the markets are optimistic. But the reverse happens. What happens is when the markets are up, thematic funds give very good returns. So many investors rush in to buy, and that's what happened in 2024. But that is not the right time to enter a thematic fund. The right time to enter a thematic fund is now, because the downfall is much more. So when the markets go up, they'll go up much higher, like the HDFC Defense Fund and some other funds. So they are very good during the bullish phase. So that is the time to exit. But bearish phase is the time to enter. So now could be the right time to enter. That is what I think. So please talk to your advisor before you make any decisions. This is based on my analysis. Another observation is infrastructure theme in particular hasn't been the best over the years, long or short term. We have seen in the short term, seen in the long term. So I would say try other thematic funds. Consumption funds seemed better with few number of funds what I've seen. I haven't done any much analysis on consumption fund, long and short term. If you feel that you want to know more about the consumption fund, especially now that the consumption theme is picking up because of the tax breaks and tax savings that the government has given, that anyone earning less than 12 lakhs is tax free. Probably the consumption theme may look better, but I don't know. Maybe it needs some analysis. Let me know in the comments if you really want me to do, because it takes time to analyze, but I would love to do it. So what should retail investors do? Finally, this is what I feel. Have just 5% or 10% of your portfolio. If your risk profile is moderate or aggressive, I talked about what is moderate aggressive even in my video, even in this video some time back, and even in my prior videos. So if your risk profile is conservative and cannot see your portfolio going down, please do not enter into thematic funds. It is not worth it. Number two, keep a profit target in mind. Don't be greedy and to see that, oh, let the market keep going up. So if you have a target of 15% or so, redeem the principal and some profits. Keep some profits, and leave it for the next bull run. But coming out might help. You may have to pay some capital gains, but it is worth it because some of the funds really did well in the short term. Finally, don't invest in thematic funds for your standard financial goals like retirement, children's education, their marriage, or maybe a house or a car, whatever. Do not invest in thematic funds for your regular goals, your standard financial goals. Continue investing in the large cap, mid cap, and small cap, because that is where you will see good returns, because the universe of companies is high, diversification is high. Because mutual fund, the best part of mutual funds is the diversification. One of the best things about the advantages, and thematic funds do not have that advantage. Their short term funds have exit when it is high, but and have a small portion of your money into thematic. So if you are an investor right now who has already invested in 2024 and are sitting on losses, probably this is not the right time to exit. You have to wait for the next bull run where you can withdraw and then switch to the small and mid caps. As I mentioned, exit when the markets are looking very good, bullish phase. Enter when it has crashed. So right now, if you're thinking of a thematic fund to invest a little bit of your money, probably now is the right time, because in the bull run, in the next 2-3 years, probably they will do better. But again, mid caps and small caps are equally good. So choose your thematic funds. Not all thematic funds are doing great. There are several thematic funds. There is MNC thematic funds, quant, manufacturing, defense, PSUs. There are several themes. So be careful on which theme you select. But as I mentioned, it is not for long term, it is for short term. So what have you thought? What are you thinking? Do you think this knowledge has helped you to know about thematic funds? Maybe not in depth every thematic fund, but as a group of thematic funds, I'm sure you've got some knowledge. Did you like this video? Have you learned something from this video? Please let me know. If you have not learned, if you feel that this was inadequate, just let me know and give me a thumbs down so that I will know. And probably this is the time to act on your thematic funds. And for the future, be careful how much you invest in thematic funds. They are not funds that you should all the time invest. As I mentioned, for your long-term financial goals, they don't seem to be the best category of funds. Stick with large cap, mid cap, and small cap. I've talked about the percentages. I've talked about the other things in my other videos. Watch my video announcing the right mutual fund, not for you. Also watch my video, investing is a boring job. So these are the videos that I've covered in depth, how to go about investing, and the risk profiling, and then the asset allocation, and all that you need to consider. So hope you liked today's video. If you are new to this video, if you have not subscribed, I encourage you to subscribe. My goal is to help young families on growing your wealth and also your relationship. And in the coming days, I'll be launching my community of young families. So stay tuned. I will talk about it in the coming days. Thank you for watching till the end, and I'll see you soon.